What's going on YouTube? It's your boy Day here, back again with another video. And in today's video, we're going to be going over my 1-minute NAS 100 strategy, or NQ, Nasdaq, whatever you want to call it. We're going to be going over that today. And before we even get into it, I just want to say I appreciate y'all like always. Thank you for liking, commenting, subscribing. Like we're growing. I see the vision with this, and I'm really reaching people. So I feel like the information that I'll be able to provide in the future, I think it's gonna be valid. So I recommend go ahead and subscribe. So after I showcase my strategy, I'm also gonna be showcasing a live trade video at the end of it. So it's gonna be introduction, which you see right now, strategy, then live trading. So yeah, I can't really just give y'all strategy and then tell y'all, okay, y'all cool, go ahead and trade it. Nah, I actually gotta prove it, like show y'all that it works, and show my emotions, do it live and all that good stuff. So yeah, I want to say every single strategy is valid, man. Like, you probably heard it before, I'm sure you heard it before, but you probably also heard like people having this like say so and what works and what doesn't work. No, bro, like whatever you want to do works. If you want to trade this way, it works. You want to trade this way, it works. You want to trade this way, it works. Whatever the case may be, the thing that really matters is yourself, your mind, your mindset. The person who's behind the charts is what's gonna make or break your success. And what I mean by that is your mentality and your personality also plays a big factor into how you trade and what you trade. For example, you could be a swing trader, don't scalp, what I'm saying? Plain, like, simple, don't scalp. You could be a scalper, don't swing trade, what I'm saying? Like, you gotta really tie these charts to your personality. What do you want to do? What I'm saying? How do you want to trade? So while you're watching my video, if you're not that type of trader who's, let's say, like a scalper, because this is definitely a scalping video, so I wouldn't recommend it to you. I wouldn't want to just tell you, okay, trade this way and you're gonna be successful. Like, nah, bro, trade however you want to trade, but don't try to force yourself to be something that you're not, or don't try to force yourself to achieve something that somebody else has achieved if that's not what your vision is, if that's not what you're comfortable with, right? So yeah, I just had to put that out there. A lot of people also just want to find a holy grail, like, I don't know, but this isn't no 100% win rate strategy. No strategy is going to be 100% win rate. You're never going to have that. So there's different parameters that go into it, and I just want to give that quick disclaimer out, because a lot of people will and I'm probably going to get it under this video too. A lot of people are going to maybe throw hate, or like, oh, you can't trade on a 1 minute, like, oh, you're not a real trader, only 4 hour and above. Like, bro, I seen that all over like social media, Twitter, Instagram, all that stuff. I had to delete that stuff, I'm not gonna lie. Like, I still got my Instagram, bro, but Twitter, toxic. TikTok, I'm not even touching TikTok. You will never see me on TikTok, bro. If somebody messages you on TikTok with my username or my face, it's not me, bro, because TikTok is way too toxic, man. So I can't do all that. So yeah, but yeah, I just had to throw that out there, man. So just be comfortable in the way how you trade, really back test, and put in the work with the charts, and I promise you, it doesn't matter the strategy, bro, you're gonna be successful. So yeah, but with all that out the window, man, I appreciate you again for tuning in, and let's go ahead and get right into the video. Alright, so getting into the strategy, we're going to be talking about the different types of markets and the markets that I want to be in for this type of strategy. So I'm going to just do a brief kind of example, but I'm going to link a video in the description. It's by Doyle, so shout out Doyle. If y'all want to go in depth with basic market structure, like I said, I'm just going to go over it briefly. So yeah, the market never just goes straight up like this, and the market never just goes straight down like this, right? If you're not new to trading, you probably already know this information, but bear with me. The market goes up, down, up, down, up, down, up, down, and so on, right? These areas are called retracements, pullbacks, whatever name you want to name it. It's retracements, pullbacks. It's whenever the market comes back. It comes back like a rubber band, right? Same with the downtrend. Down, up, down, up, down, up, right? The market never just go this, right? With these retracements and with these pullbacks, this is basically where my trade is going to be happening. These type of trades, like the uptrend and the downtrend, these type of trades happen on every single time frame. Go to TradingView right now and go to every single time frame, and you're gonna see this pattern, this upwards pattern, this downwards pattern, right? Now there is another market condition to where I completely avoid, and that's where it's consolidating. That's when the market isn't going anywhere, right? But just because it's consolidating doesn't mean that you can't trade it, right? Some people are just strictly supporting resistance trading. And that means when the market comes to this point, they sell. This point, they buy. This point, they sell. And you get it, right? I'm sure you heard the term before. This isn't the type of market that I want to be in with this strategy. So I need a trending market. This is a consolidating market, a ranging market, right? I need to see a trend. You know, I need to see price moving, right? So I'm pretty sure you heard the term maybe like supply and demand, or maybe you even heard Fibonacci's, or you know, something, anything like that. Basically, for people who trade trending markets, basically we all do the same thing, just a different way of getting our entry. If you're a supply and demand trader, and let's say you see this uptrend, the way how you're gonna mark your trades is mostly, from what I've seen, mostly by drawing some kind of box, right? Drawing a box. You may have different confirmations or confluences for like looking left and something like that, but the point of the idea is that, you know, you're getting in this pullback, you're getting in this retracement right here, right? So you're gonna like draw a box, and then it's gonna come down here and then come back up, right? You're looking for a retracement, a bounce, right? Where price is like getting tired of retracing in this uptrend. We can obviously see we're in this uptrend right here, right? So you see prices getting weaker and weaker and weaker, come into like an area of interest, and then you buy right here, and then it goes up, right? That's basically, you know, supply and demand. Same with Fibonacci's. You know, let's say, I'm about to butcher this drawing, I'm sorry, but let's say I don't even, how do you even draw a Fibonacci, bro? Like, hold on. It's gonna look something like this, but you know, it's gonna be the same as the supply and demand. You're gonna have like numbers, right? If you want a video on that too, Doyle actually has another video. I'll probably link that to his Fibonacci and his supply and demand video, because that's actually how I learned how to trade, honestly, just by watching those two videos and then watching his market structure videos and his psychology videos. So I'm gonna link them down below. So they're gonna have like numbers. I'm gonna just like draw like the squiggles. You're gonna have like random numbers right here, right? So the idea is the Fibonacci, or I'm sorry, the idea is price is going to come back to a point of interest. Let's say it's like over here, and then you're going to see that price is getting weaker. Maybe you have like a pattern that you want to follow. Maybe you just want to get in this area. The main point of like saying this is that everybody who trades in a trending market is literally low-key kind of doing the same thing. You know, now that's not the only way of trading, so don't get that through your head. Like, you know, don't think that this is some holy grail, some, you know, magic, oh, like this has to work every time, or oh, in order to be successful I have to trade this way. Nah, that's not the case, because people trade so many different ways, but I'm not even going to get into that, because we're just going to stick right to the strategy, right? Down to, you can have a fib set up like right here. You know, price came to this area of interest. Let's say price came right here, you sold right here, stop loss right here, boom, take profit. Now let's say you'll have a supply zone right here. You just draw a box. I know this is gonna look kind of ugly or whatever, but basically this part is the Fibonacci and this part is the supply zone. So you're selling once price get right here, and then boom, it comes back down. That's basically, you know, that's basically the foundation of the strategy, like the base of the strategy. Look for trending markets, look for a pullback, and then react off of that pullback or the retracement, right? So instead of using Fibonacci's, or instead of using supply and demand zones, I use EMAs, right? So I use 3 EMAs. I'm gonna use the 20, bro. Yeah, I'm gonna use the 20, 50, and I'm gonna use the 2, bro. Yeah, the 200. Y'all got it. This is going to be equivalent to the supply and demand, or the Fibonacci, the tool that I'm using to have my entry in that retracement. That's basically what it is. And I'm gonna show y'all, how it actually looks on the charts. But I just want y'all to know that you can use like indicators, any type of indicator you want to use, any type of tool that you want to use, as long as you just have the basic idea of how price action works. like you're good. So you could do whatever you want to do. Honestly, you can use like RSI, you can use MACD, like you can use like every indicator that you want to. The main thing that I feel like you need to know is just price action. You know, you could do anything as long as you have price action, and then you can have as many confluences as you want, indicators, tools, naked price action chart, you know, you're good. So price action is just like key. So for this strategy, I use 2 indicators. The first one is optional, and then the second one is my actual EMA indicators. The EMA indicators, like I said earlier, is just for my entry, but the first one is actually going to be to identify the time. You go to indicators, and it should be this one by this person. So it's like, you know, use custom sessions time zones, and then if we go back full screen, you can actually go to like edit it, right? You can have different like time zones, like you can have different sessions. Basically you can colorize and like, you know, categorize them however you want to. I just have this one session. I think it's the second session. It don't matter for real. So my time, I put 8:30 to 11 because it's like, it's different the way how like the times and the charts work for like the this futures charts. It's kind of different. So I think I had to go like an hour back and an hour earlier or something like that. I don't know, but all I know is that you want your time, like your shaded area, to match 9:30 a.m. to 12 p.m. If you go to like a if you go to the indice chart for Nasdaq, I'm sure you could just type in 9:30 and then 12 and it'll show up. But you know, for the futures chart, for NQ, it's gonna be 8:30 to 11, right? So 9:30 Eastern Standard Time to 12 p.m. Eastern Standard Time, right? And I also have my EMA. So what I use is a multi-EMA, the indicators, and it's gonna be multi-EMA by this person, right? So we'll go back to full screen. So what I do is, now I only have these 3 equipped, right? If you go to style, you can see I only have 1, 2, or 3. For the first one I have 20, for the second one I have 50, and for the third one I have 200, right? My 20 is black, my 50 is blue, and my 200 is red. Okay, remember the uptrends and the downtrends I was telling you about? Remember I told you price never just goes straight up, never go straight down. You can see it already off rip. Prices retracing, then going up. Prices retracing over here, going up, right? And so on. It works with downtrends. Price is coming down, coming down, coming down. It came down a while right here, right? But from here, price is retracing up, coming down. Price is retracing up, coming down, right? Now that you know the basic market structure with like the uptrends and the downtrends, now I'm gonna actually get into how I actually enter trades. The 20 EMA is where price is basically gonna be at, right? It's not gonna be exact because it's not like hugged on to price like that, but it's near price the most. So 20 EMA is kind of what you really want to focus on, but all these lines are important. I'm gonna get to that. Trending market, right? You do not want to be in a market where it is like, you do not want to be in a market like this. Remember what I said, the 20 EMA is going to be that baseline, you know, that price line, right? And you could tell that the 20 EMA is just crossing over down, crossing over up. You know, it came up a little bit, but it's not really trending. It's like still coming up, down, up, down, up, down. You could tell like it's just up, down, up, down, up, down. Avoid this at all costs. The second thing that I need to see is you need to see all 3 EMAs basically be above each other, right? So in this example right here, let's say if we're looking at the area right here where my cursor is, you can see that the 20 is above the 200, right? But the 50 is still below the 200. So this will be invalid, right? Basically another like kind of like thing that you really want to see with this strategy, wave pattern, right? So I'm gonna get into that. Now from this point on, where the 50 crosses the 200, everything is above each other. The 20 is above the 50, the 50 is above the 200, and now you're looking for buy trades, right? So once you start to see price expand like this, and like I said, this goes back to this wave pattern. I'm gonna put it right there. Once you start to see price kind of expand like this, you have a valid trade. This is basically gonna be this uptrend, right? Remember when I have my examples, you know, the uptrend, boom, it comes up. This is basically what this is. Now this area right here, if you go back to like, you know, the lesson that I was saying earlier, is the retracement. So basically you're just looking for the retracement, and then you're capitalizing off of this. The way how I enter a trade is when I say price needs to come back and touch the 50 EMA, I meant like during the retracements, right? Price literally needs to come back and just touch the 50 EMA, right? Now, I'm not saying I'm buying from here automatically, because as you can see, you know, it still came down, you know, and I want a better entry. So price just needs to touch it. And sometimes price will literally come, like, let's say right close to the EMA, and it doesn't touch it at all, and then it just takes off, right? Now you can determine, this is on you, you know, you could determine if you still want to take trades like that, but for me, I need to see price touch it, whether it's the wick or if it's the body. After you have that touch from the EMA, all I am looking for is a close above the 20 EMA. And that's pretty much all I do, honestly. Price came back, touched the 50 EMA right here, right? Now we are waiting for price to close above the 20 EMA. And that's where the entry is going to be. Price closed right here. Let me kind of move this right here. And that's basically all I do. That's literally all I do. Like, I wait for a touch to come back to the 50 EMA, and then I wait for a closure above the 20 EMA. Now, the trade is going to be invalid when the 20 EMA line, or I'll just say 20 EMA, the 20 EMA crosses the 50 EMA when you are waiting for a closure, right? What this means is, let's say remember our rule, all three lines have to be above each other in the uptrend. If you're looking for buys, you know, for the downtrend, all three lines got to be below each other, right? But since this is a it's a uptrend example, right? Let's say the 20 EMA came below this point before it even like crossed or closed or anything like that. It'll be invalid, right? So imagine that this line came right here. Instead of staying above the 50 EMA, it comes down and it crosses it, and then it shows like a closure. I'm not getting in the trade. I have to see that wave pattern. I have to see all three EMAs above each other. There will be times where price do cross and then it gives me the closure, and it'll still make the uptrend move. But when I back tested this on a consistent basis, it wasn't consistent enough, right? And I noticed when price have all three EMAs above each other, it shows a strong bullish pressure, or like three EMAs below each other, it shows a strong bearish pressure, right? So that's pretty much all I look for, honestly. Now, for the actual entry, when I got funded, right, I was using US 30. This strategy was on US 30, right? And I had different I had a different stop loss placement. I used a fixed stop loss. So with US 30, I think it was like 30 or 40. I have no idea. I'm not gonna lie. I gotta look back into my notes. But I use a fixed stop loss and a fixed TP. I use a fixed stop loss and TP because it's just easier on my mental, right? I was trading the same lots, the same lot sizes. Like, nothing was changing. I just, you know, wake up, you know, go to enter my trade, boom, everything's already calculated because it's the same measurements, all that stuff. So I was just using a fixed stop loss and TP, and it just really helped with my mental, right? And I had to backtest this like crazy to understand what were the right numbers to use, right? So if you go to backtest this strategy on like any other pair or currency, symbol, indice, whatever you want to do, when you go to backtest this, make sure that you keep this in mind, because your fixed stop loss and TP may be different from somebody else's, right? So for the purposes of this strategy, I have a 20-point stop loss and a 40-point take profit. And this is going to be a 2-to-1 risk to reward ratio, right? Actually, hold on. A 2-to-1 risk to reward, right? Now with US 30, I was actually going for 1.5 risk to rewards. But honestly, when I was like backtesting it and backtesting US 30 too, like it went to 2-to-1s. I think I was just kind of trying to secure my my trades, especially by taking a challenge and, you know, getting funded and trying to get the withdrawals. I was just really trying to secure everything. So that's why I went with a 1.5. But for the future, like, you know, future purposes, as of right now, I'm gonna go for 2-to-1s. My entry will be right here, and it may be a little up, it may be a little higher, because like maybe like, you know, the distance, like if you could deal with spread or whatever the case may be, it's gonna be up like a little bit more. So And we're on the 1 minute chart too, I will say that. So you got to make sure that your entry is precise and that you're paying attention, because price, you know, it doesn't really do this often, but if you're looking at the 1 minute chart, you know, price moves super fast. It moves fast, especially on the indice. It moves really fast. So you're gonna have to really pay attention. Luckily with this trade, it's still kind of hung around this area, like with this candle. But sometimes price will like make this move and then it'll just go straight up, right? So you gotta be precise and actually really pay attention. Like I promise you, if you don't pay attention to, you're gonna miss out on the entry, right? Now I will say there is an example where price makes a move and it closes, but it closes way above the 20 EMA. I'm actually going to show you that right now, so I won't, you know, get y'all confused. This is a perfect example of a market you do not want to trade on. You have to wait until price is making this move, right? Finally got our wave pattern. You know, price is like expanding to the uptrend, so we're looking for buys, right? All three EMAs line up. The 20s above the 50, the 50s above the 200, right? So price came back down, it touched the 50. Now it closed up here. Now this isn't really like a bad closure. Honestly, this is a good one. So your entry can be right here and you can still get like the same kind of results, like a 20-point stop loss, all that stuff. But if you want to be on the safe side, and let's say price closed like up here instead of closing right here, you can wait for a retracement within this candle. You can either wait for it to come back to the 20, or you can wait for it to come halfway to this candle. So instead of entering right here, you would enter down here, or you would enter like right here somewhere, but not up here. See, if it was like I said, if it was a let's take this candle for example. Let's take this candle for example. If this candle closed, like was the first closure to this one, I will wait for this to come like right here, or like somewhere like right here. Somewhere right here, and then I would enter my trade. Because the reason why I say that is because I'm trading with a fixed stop loss. So you got to remember that the market literally came back down before it went up. Even in an entry like this, it doesn't just go straight up. It comes back down, it retraces. You're gonna have drawdown, bro. So you know, to try to maximize, you know, the possibility of avoiding that drawdown, that's why I got this better entry when it comes to bigger candlesticks. But this one right here, it's not really that bad. It's not really that bad, but just keep that in mind. You know, if it comes back, if it closes and it closes like bigger, and you're like, I want to wait, you know, a little bit more, then boom, you can wait for this retracement and then set your 20-point stop loss, and then your TP will hit over here, right? No strategy wins 100% of the time. So, yeah, I actually got funded a first time. Like before then, I got funded before using this same exact strategy, but I was like, you know what, I'm gonna go all in. You know, poor risk management, everything. You know, my mind was not right, and I went all in thinking that this strategy, you know, just working all the time. Nah, bro, I lost that account in like 2 days, bro. I was like, never again, man. Let me be humble to the markets, because it will humble you, bro. It will humble you. In this example, it came to the downtrend. I mean the downside. So we're gonna look for a downtrend move. This is another key thing I want to show. Price came to the 50, right? It's still like retrace. It's still valid as long as the line is all three lines are below each other. You're good. But you see, price started wicking, right? I promise you, do not get into a trade if you see price wicking. Just because it crossed doesn't mean it's gonna close. So this is another one of like the most important things, bro. So if you see wicks do not equal closure. I'll say that as many times, bro. So price closed right here, right? I would have gotten right there. My template, right there. And another thing too, if you want to learn how to make a template real quick, I'll show y'all real quick. So what I do is I take a tool and then I basically have it come to 20 points, and then whatever stop loss, let's say you're doing a 1-to-1, right? So what you can do is right click it, go to template, save as. Now you can save this template as, let's say, like 1-to-1, 20 point or 20 stop loss, 20 TP. You can hit save. Then whenever you go to, like, you know, you see a trade happening, and then boom, you just want to like have your tool already ready. It's right here, right? So you can, that's how you make a template. Price came right here, it closed right here. my entry would have been right there or right here, somewhere like in this area. And this candle was typically like a little bit of a further closure, but it's not. Trust me, you're gonna have candles like this, right? Let me get rid of this. You're gonna have candles like this that closes, and you know, then you're gonna see like a retracement back. This candle is still kind of medium size, so it's good. So small candles and medium sized candles are good. It's just the longer base candles where it's like this, or like this one right here, or this one. This one right here, I don't even know. I probably would even avoid it. You know, sometimes I don't get into entries if it closes as a very, very long candle like this, right? So yeah, it's all like your preference. You know, you gotta back test it with every strategy that you see on YouTube. Whatever you see, it back test it for yourself, bro. Please back test it for yourself. Here we go, 2040 2-to-1, and as you can see right here, boom. Now this strategy, like I said, all strategies do not work 100% of the time. So I'm gonna go ahead and show you a quick example of a losing trade. Prices in this downtrend. I mean, I'm sorry, it's in the downtrend, but it's still like a consolidating market, but it's still in the downtrend. Once price broke right here and I started seeing this like wave forming, I was like, okay, bet I might have like a nice entry, and yeah, we might be good. So I think I remember taking this trade. Price touched the 50, you know, like I said, price made this because you're gonna see this, right? Obviously you're not gonna see what happened afterwards, but from what you're gonna see is you're gonna see price making this downwards move. I don't know if you can clearly see it over here. You're gonna see price, this is literally what the market is gonna be like. You're gonna see these candles form and print and print and print. So you know, you're gonna have this downward move, right? The opening just came and all that stuff. It was still a good trade because it still could have went my favor. But what I did was price touched the 50, you know, it wicked, so I didn't get in an entry. I think, see, and this is what I'm talking about with these bigger size candlesticks. This is the candle that quote. Oh, that's another thing too. Hold on. My bad. I like to have my my charts black because it's just a mental thing. You know, I don't really focus on color, but for the purpose of this video, I'm gonna show y'all, you know, color. Price closed with this big candlestick. Like I said, the big candlesticks are kind of hit or miss, you know what I'm saying? So I think I had entered off a retracement right here, right? You know, if you really want to, if you just want to filter out and just like not enter trades off of big candlesticks, you could do that. But for me personally, sometimes like there's like these bigger candlestick moves that happen and then it retraces and then it just looks so beautiful, right? I think I had gotten an entry right here, and then you can obviously see price hit my stop loss up there, right? And then what I was doing was I was looking for more trades, and I think I had lost twice. I either lost twice or I stopped trading. And actually, you know, I actually made another rule judging from this trade. I think I'm gonna take one trade a day, even if I lose. It's cause that's the whole point of me going for a 2-to-1 risk to reward ratio. Because if I lose today, I could win tomorrow and still be in profit, right? So I took this other trade because price made this downtrend move. It came to the 50 and then it closed right here. So I got in like exactly right there, and price hit my stop loss again. So I was done for this day. But I recommend you to take one trade a day, honestly, because you know the moves that happen, like there's always like opportunities in the market, but I promise you your mental will be so much better like the less you trade. It's such a game changer, bro. Unless you're just like a hardcore type of scalper, you're just like scalping like, okay, boom, you see like a nice bullish engulfing, you scalping this. Okay, now you see a bearish engulfing or whatever, you scalping this. Unless you're like that, go ahead, you know, that's cool. Like you can do whatever you got to do. But me and my mental, I'm taking like one trade a day, bro. The only time I'll take another trade is when my entry is like kind of off or something like that. I'll like get in another trade. But yeah, for the most part, that's all I do for real. So yeah, that's pretty much all I do. I don't think I'm really missing anything. I think this is pretty much like a summary of like, you know, a brief summary of what I did. So we need a trending market, right? I have a fixed TP and stop loss just for my mental. If you want to, you know, have like certain areas where you want to have your stop loss and TPs at, that's fine. You know, you can do what you got to do, right? All three EMAs have to be above each other looking for buys. All three EMAs have to be below each other looking for sells. Wait for the candle closure above the 20 EMA, and also I added wait for candle closure below the 20 EMA as well, because you know that's going to be the downtrend, this is going to be an uptrend. Trade becomes invalid once 20 crosses the 50 or 50 crosses to 200. And that's pretty much it. I'm not gonna lie, that's really my strategy, you know. Now I will say I have back tested this on currency pairs. It do not work well with currency pairs. I will not lie. Like, I back tested this with Euro USD, GBP USD, and AUD USD. It did not work. Now what I will say is, when I changed up the EMAs and I had different like numbers, like let's say instead of the 20 EMA I had like a 9, or instead of the 50 I had 100, you know, when I changed up the EMAs and I applied the same rules, I saw like more progress. But I didn't really stick with it because I just wanted to focus on US30. So yeah, at that time when I was like taking a funded challenge. And remember, I'll link a more in-depth video in the description below. But like I said, you just want the retracement. That's all you really want. You just want to take a trade in these areas. So if you could find like EMAs, or you know, if you could do a supply and demand. Now let's stick with EMAs because this is an EMA strategy. If you could find EMAs that follow this rule for like currency pairs, and you know it works for you and you backtesting it, all that stuff, if you're a currency pair trader, then you're good. You know, it's the same strategy. You know, I just know for a fact that the 20 EMA, the 50 EMA, and the 200 EMA, when it comes to looking at an indice or like a futures chart like this, like Nasdaq or US30, compared to Euro USD, it's not the same. So you're gonna really have to tweak it, and especially with the fixed TPs and the fixed stop losses, those are definitely not the same either. So you're just gonna have to back test it with the correct numbers, the correct EMAs, and yeah, if you want to stick with that. People are gonna ask like what other pairs does this work on, and I'm sure this works like on other pairs too, just with different settings. So I haven't really tested it, but what I've tested it on was US30, NAS 100, and SPX 500. Bro, my mic, bro. I thought I was just talking to myself for like an hour straight, man, but luckily the audio was still working. You know, God came through. But what I was saying was, if I remember correctly, the 3 pairs that I tested this on was not pairs, but 3 symbols: US30, NAS 100, and SPX 500, right? These are literally the only three symbols that I tested it on. So like I was saying, you gotta really tweak it and back test. If you trade a certain pair, like a currency pair or something like that, excuse me, or if you trade a different symbol, back test it to the T, bro. You gotta make sure everything is correct, especially being on a 1-minute chart. If you haven't traded a 1-minute chart yet, I highly recommend you to maybe start with like the 3-minute chart, or like even the 5-minute chart, just to get the hang of the strategy, because it goes super fast and you're gonna have to really back test like everything. So and you know that goes with every chart, every time frame, but for a 1-minute chart, you know, it's definitely fast paced. It's not like super crazy fast to the point where you cannot trade it, but it's fast. It's faster than usual, you know. So those are the only 3 ones that I really back tested on. So you know, to each your own. You know, you gotta do what you gotta do. So yeah, that's pretty much all for this strategy. It is currently, I think, like 9:21 right now. So I just got done recording the strategy, and now we're gonna actually hop into some live trading. Alright, so it is currently, like I said, 9:22 a.m. and I'm gonna show y'all some live trading, because I can't just tell y'all a strategy and, you know, even though I got funded with it personally and I had like, you know, wins and all that good stuff and losses, I can't just give y'all a strategy and like, you know, leave y'all in the dust like that. I actually gotta show y'all, you know, me trading it, you know, like that's authentic, you know. It's not 9:30 yet, so nothing is really shaded, as you could tell from like my strategy example. I'm actually trading on TradingView, and the reason for that, if you haven't watched my last video, go ahead and watch that real quick, because I'm explaining that I am transferring over from Forex to futures, right? I explained in that video why, and you know, I'm not gonna go in depth right here, but you know, one of the perks of it, you know, is trading on TradingView. And I know you could do that with FX brokers and stuff, but it was trash. I'm not gonna lie, it's trash. So me going to futures, I want to learn this platform, and yeah, so I do analysis on TradingView, but I just never actually traded on TradingView. So I have a demo account set up actually right here, and yeah, it's still live trading. It's still me like going to trade, but this account is going to be the same account, or not account, this way of me trading is going to be the same way when I go to take futures prop firms, right? I'm going to be trading, or even a futures personal account, I'm going to be trading on TradingView for now. Yeah, I just had to clarify that, you know, I'm not trading on my funded account. Plus this Q4, so I'm not really trying to do too much like trading and stuff like that. I'm trying to really wait until Q4 is up and wait until Q1 comes back. So yeah, so this is all just me just getting used to the platform, but also still bringing y'all some live trading on what I did exactly to get funded for like funded pips and all that. So yeah, you know, that's all I really got to say. So let's go ahead and get this live trading session started, and I will catch y'all back when I get a setup. I actually think I just missed this setup, I'm not gonna lie. I'm gonna set a buy limit right here. I'm 100% sure I missed this setup. Wow, I was trying to get my audio right and like all my stuff. Wow. Like if I wasn't like trying to mess with like my audio and trying to get everything right, making sure everything was cool, I probably would have took this real time, because price literally closed right here and it came back to retrace. I would have had like a limit order right here and I would have took it to the upside. But wow, TP hit. That's actually kind of crazy. But yeah, but we're gonna, you know, we're gonna keep going. You know, this is all part of trading for real. So yep, let's go. Honestly though, like looking at the bigger picture, even though I still would have took that trade, I feel like this is more like a initial push that I would want to see. So yeah, I mean, like I said, we're just gonna see what happens for real. Price is showing a lot of volatility off rip, you know, as I expected. You know, that's how it always, not always go, but that's how it goes like 9 times out of 10 when it comes to the New York Stock Exchange. Yeah, so this is a type of trend that I would love to see. You know, I see like, you can see like this wave pattern looks like it's about to form. We're just waiting for we're waiting for price to give me another entry or setup. If it does, and if it respects the 50 EMA and give me my confirmations, we'll be good. This is a beautiful trend, beautiful uptrend. This is actually ideal. You see this wave? See this wave formation right here? Let me label some stuff too. Wave pattern. Let me label some stuff. So this is like a beautiful wave pattern right here. Beautiful wave pattern. Price is showing a little bit of exhaustion to the upside, so it may be like time to actually pay attention and look for an entry. And yeah, all right, price is showing some pressure, some volume. All right, so it tapped the 50. So now I am going to be looking for a candle closure above the 20. Now actually, I'm glad that this situation happened, because let's say this candle closed above the 20, right? Now I back tested where I took a trade where it did close, right, and where it didn't close, and I'm leaning more towards, like, let's say this same candle like closed above it. I think it would be okay to take it. You know, that's something else that you definitely want to back test, and something I definitely need to back test, excuse me, some more. So yeah, in that scenario, like if this was the same candle that touched the 50 and closed, I would take it. You know, I'll probably tackle that more like if I make a part 2 to this strategy. Not part 2, but just like an advanced version. So yeah, so right now I am actually gonna set a buy limit right here. I wanted to come down a little bit further, and then I'll enter in the trade just like that. So now I'm gonna do a buy stop or market execution, I guess, and then we're gonna risk that. So 2-to-1, we're in this trade right here. Got in the trade basically right here. Let me make sure that this is like matched up right here. So now instead of 20, it's about like 21, and then right here. So basically 2-to-1 still, you know. Yeah, so I'm gonna probably either let this play out, or I'm going to just fast forward it maybe give some thoughts like during the trade, and yeah, we're gonna see what happens. This is just like me testing out TradingView, so it's not really like an account that I hold emotion to. Like, my emotions really like aren't valid. It's not going to be valid until I'm, let's say, taking a challenge or taking a like having a personal account where I'm actually showing like real risk. You know what I'm saying? This is, like I said, just testing a platform for real. So I want to show like real emotion through live trades. Like, I'm gonna bring some more videos with live trading, and I'm gonna definitely like show my emotion, like, you know, way better with like real things that I'm like, you know, risking. Whether it hit stop loss or TP, you know, you gotta trade tomorrow. You gotta trade next year. You know what I'm saying? You gotta trade next week. So, yep. But I like this trade. I like this trade. If I wasn't recording live, I probably would not be watching this. Honestly, I would set my alert for my TP. I would set an alert for a stop loss, and you know, I would just, you know, kind of just chill. I'd probably be, I don't know, doing something else, doing work, playing a game. I don't know, but I would not be staring at this 100% of the time. I feel like I already done enough like market research, and you know, again, that experience with like the candlesticks, how it forms and all that stuff. But I don't really look at it like straight just like this. So it's not like it's draining. It's just, I don't know, bro. I just don't want to look at like candles form all day. Like I said, I'm only doing this for a live purpose, like video. And yeah. No, y'all could like let me know. Do y'all like this webcam type of video, or do you like? Would you prefer for me to just say, you know, do a vlog style type of video? I don't really know, honestly. I'm gonna figure it out. But yeah. So we're just having a bunch of bullish, you know, pressure. Now honestly, I used to have a point where when price gets halfway to my TP, I would set it to break even, or I would take like 50% of this and then set my stop loss to break even, like a more secure route. And I would do that, but for now I'm really just testing, like, you know, my 2-to-1s, you know, just accepting the loss of whatever happens and not securing profits. So that's just another thing that I gotta back test for real, you know, see which one do I really prefer, you know what I'm saying? Because if I took 50% halfway, and then let's say it reached my TP, kind of like how I was doing right now, then instead of a 2-to-1 risk to reward, I will have a 1.5 risk to reward, basically, or 1 point. It's something less because of you taking the half profits. You know what I'm saying? So everything is just, you know, everything is just trial and error for real. You know, you just really gotta back test to see what you want. And yeah, you know, so. I will say though, bro, trading on TradingView, I'm not gonna lie. If this platform can be like stable and like have like no issues, honestly, bro, this is like probably gonna be one of my favorite trading platforms. I'm not gonna lie, just from the fact that I love doing analysis on TradingView, and then I love like the execution, especially with like the calculator, bro. Like if I show y'all real quick the calculator, like this right here, like just typing in the money that you want to risk, typing in the percentage you want to risk, you know, not have to calculate lot sizes. Like everything is already lined up with like your analysis. The chart is gonna be whatever chart you're looking at. Like trading from here, bro, I could tell with like, you know, with futures and stuff, I'm gonna enjoy it way more than MetaTrader. Like MetaTrader always got a special place in my heart, but I don't know, if all the stuff going on, man, I don't know. But you can trade futures on MetaTrader though. I will say that. So, you know, maybe, who knows, I might even go back to it, but I don't know. Trading View is just really, really nice right now. I'm not gonna lie. So I'm loving it. I'm loving it. You know, I can't wait. I got so much in store for y'all. Like, I'm telling y'all, when January comes, bro, I have so much in store. I'm gonna share everything, man. Like everything, all my experiences, my mental, my like the super transparent like parts, bro. I'm excited, man. I'm really excited to start this journey. So, you know, this is just a little, you know, test. You know, even with MetaTrader, I'm not MetaTrader, even with TradingView, and with like my personal like content. You know what I'm saying? This is all just a test, trial and error, and I'm excited. I'm excited to like help y'all, you know, encourage y'all, you know, reach goals that I probably never imagined like reaching. You know, I'm excited for all this, man, and I want y'all to remember like moments like this where I'm literally in the beginning, and you know, we can have more of these, you know. That's pretty much all I got for today. If you like this video, go ahead and drop a like, you know, drop a subscribe too, and yeah, if you got any comments, you know, drop it down in the comments too, and I'm gonna reply to them. Yeah, until next time, man, you know, look forward to 2024, man. Like, mark my words, bro. Like, 2024 will be a banger year, bro. So, you know, I'm just trying to, you know, trying to entertain, inform, all that good stuff, you know. So yeah, that's pretty much what I got. So until next time, y'all stay blessed, stay safe, all that good stuff, and yeah, I'm out.